Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 20th of April, comes to you from London. But I am flying to New York at lunchtime today, and so for the next week, Charts Today will be coming to you from the East Coast USA, and then the following week, or beginning of that week, will be West Coast USA. So I've got a series of meetings in the US. So Charts Today times may just be a little bit erratic over the next couple of weeks. But it doesn't change the fact that markets need analysing, and they are constantly changing. And so we look at crude oil. Interestingly, we've got this downside target, then this upside target. And in fact, I've already produced my morning call report this morning. And the interesting thing on crude oil was we had downside targets on Friday before the fall, and then we had an upside target at the end of Friday, which is where we've gone this morning. So really quite interesting that we see those targets being met. And we're waiting to see if we activate this downside target on the 60-minute chart. So really quite interesting, and we are seeing markets coming back. And we went out as neutral on oil and gas today to our clients. So the interesting thing is that the recovery is not really holding by the looks of things, and so we are just seeing generally a trend lower. And if we look at the weekly chart of crude oil, most people have forgotten to look at long-term charts. We see here that the previous level, that 125 level, become a sort of key level of resistance. We just couldn't quite get to those levels, and we are pulling back from that. We are in a massive trading range between $60 and $120, and that's just sounds ridiculous, but that is the long-term trading range that we are sitting in, and we can see that crude oil was in steady decline. So there are big underlying forces that are causing this in terms of the charts, but there's no denying the fact that we had a bullish move on this war, and now we're seeing that largely unwinding. But of course, stay tuned. The prolonged effects of higher crude will filter through to other charts. And so we're seeing the dollar index. We had this downside target. We had a little mini range between 98.50 and 99.50, let's say, and then we've moved down to a new trading range, 97.50, 98.50. So we are trading in these 1-point ranges on the dollar index, and that means that we are seeing other currencies like sterling stepping up in their ranges. So that's quite interesting there. We had a range and a new little range and then another little range. And if we break 136, then we're looking to that 139 and 140 target. So that will be really quite interesting to watch. Bitcoin has actually just broken below the cloud. We did that just over a week ago, and we've done it again today. We've got a little upside target. The daily chart for Bitcoin has just broken to sort of new 2-month, 3-month highs, but the reality is we still have these downside targets hanging over us. Now, the Nasdaq last week made a new all-time high. The big question is, can we hold on to this? And I like to see 3 days for the daily or 3 weeks for the weekly to be able to say that this level is held. So we're seeing the futures down about 0.5% today. And I think realistically, people are realizing this Middle East crisis is not is not going to be over anytime soon, and that may well have an impact. We're seeing the FTSE future down 1/3%, and the DAX in Germany has been harder hit, down 1.3% this morning. So we're seeing European bourses falling away, and they have failed to make new highs, so that's quite key. Japan stocks are strong, up 0.5%, so Asia's actually been largely higher. But if we look at the shorter term chart, we can see we're still failing to make a new high there. And the big one that I'm still keeping my eye on is this bond yield in Japan. That's the big question for me. If we break to new highs, we've got a target to 254. We break above 250 again and hold that level, we've got a target to 279. That's going to be a big amount of pain for the Japanese economy, and the most indebted country in the world. And of course, they are very affected by the Middle East crisis. So that's going to be quite key. And we're seeing targets to the upside for US bond yields. So that's still a factor. Looking at some of the commodities, I've already produced my commodities report for clients this morning. We are mostly neutral to bearish on soft commodities this week. And we're seeing here a mixed picture on coffee, but looks like it will break to new lows, got a downside target, and sugar is breaking to new lows, and the 60-minute chart really clear downside target. So that's very bearish, and that do keep an eye on those shorter term targets. We're looking at gold. We had nice upside targets activated last week, but we've already started to struggle, and we've got a new unactivated downside target. So gold is looking a little bit less clear, but of course the moves to these targets back to the top of the range on the daily does mean that we will have steps forward and steps back. So we can see here it's a very weak trend. It's not consistently above the cloud, and silver is down a 1%. So here, waiting to see which target activates. That's going to be quite key. We saw the tech majors in the US looking very strong at the end of last week. Nvidia nudging that $200 level and breaking it. The key thing is, if we look at Nvidia on the daily chart, we can see we're still not making a new all-time high. And if you look at the Mag 7, which ones are making new all-time highs? Not Apple, not Amazon, not Alphabet, not Microsoft, that's for sure, not Meta, and not Nvidia, and not Tesla. So quite interesting there. Whilst the market is making new all-time highs, the Mag 7, none of them are. So that's just something to bear in mind. So it's going to be a very interesting week ahead. All eyes are going to be on what's going on in the Middle East. But the reality is it's a weak recovery, even though we're making new highs. None of the Mag 7 are. Until tomorrow from New York, have a great day. Happy charting. Bye from now.